Philipp, you've always given me really good chat on inflation. Of course, you believe that it was something, that can't stay here for a long time because a lot of it was imported. Has your view changed on where this inflation is coming from and what it does to consumers around the world?
I think sadly there's not enough of a sort of fundamental analysis of why we have this inflation. And I think we live in a world shaped by supply. We have, of course, more demand than supply, otherwise we wouldn't have inflation. But the real reason for the inflation is that supply is at an unusually low level as a result of the restart post-COVID and the energy shock from the war. So that's the story, and that means you have to be thoughtful as to how you're going to mitigate this inflation by way of policy.
So how should central banks look at this? First of all, is there any question that the Fed is behind the curve?
Well, I think that the key problem is in a world shaped by supply, the way I just described, that you're not going to get a perfect outcome. There's a trade-off involved. Either you have to accept that you're going to have to live with some inflation for some time until these supply problems mitigate themselves, or you have to stamp out demand so much by raising rates so much that you actually drive down inflation. But the price of that is going to be very, very high. And I think that's the part of the debate that is missing.
But you think that's a recession? I mean, if you hike interest rates to a point where you actually deal with inflation, I don't know whether there's an optimum rate for inflation given where we are now. At 4%, do you have a soft landing or do you still have a recession in the US?
Yeah, that's the right question. My sense is the central banks will recognize that they cannot kill demand in order to get inflation down. So they will ease off once they get to neutral. Right now they're talking very, very tough, and that's what's unsettling the markets. Think about it. They were on one side of the boat, completely stuck on this transitory debate, and now they've rushed over to the other side of the boat, talking about stamping out demand in order to get inflation down. So no wonder markets are rocky. In the end, I think there will be a middle path, but right now, they're trying to find that place. And what's missing, I believe, is more of a debate as to what is shaping the world right now, what is driving this inflation, and that's the supply story, the unusual low level of supply.
But it doesn't make central banks' job any easier.
It doesn't. No,
in fact, it makes it harder.
It's very hard for them because for the first time in a generation, I believe there's a real trade-off involved. You're not going to get to the Goldilocks outcome where you can kind of, slow demand just enough to get inflation down but not have a recession. This is a different story because it's shaped by supply. And so for the first time in a generation, they're really facing a hard trade-off. So it is a very difficult moment for them.
Philipp, what does it mean for markets? So we saw this huge swing actually on S&P. I know it's a bit supported by China right now, but where's the bottom for some of these equities?
Well, I think, this boat analogy is probably pretty good. So they were on this transitory side, the central bank. Now they're rushing over to the other side of the boat. That's rocking markets. As I said, eventually I think the market will find its way once they see what the central bank is going to do. Recession, in my view, is still unlikely in the U.S. Unfortunately, it's probably inevitable or just about inevitable in Europe, given the much greater kind of impact the energy shock has.
But you're not seeing like a hurricane whilst the boat tries to go from London to New York, right?
I think in the short term we're going to see volatility here. The market is trying to find its way. Central banks should normalize. There's no question about this. Once they get to normalization, it's a different story. I understand why they talk tough.
Yeah.
What's missing, I believe, is more of a focus on the real reasons for this inflation, and that's the unusually low level of supply.
Okay, where's this terminal rate? This elusive terminal rate. Can we actually find it, or?
I believe that in the end, this interest rate cycle will still end up being much more modest than what inflation currently would imply. We'll see. Right now, that's not what they're saying. If you look at the way the market is pricing the terminal point of this cycle, it's still pretty modest relative to history, relative to where inflation is currently. So the market isn't entirely buying the story, even though certainly the equity markets day by day are reacting very much to this very hawkish tone that we're seeing from the Federal Reserve in particular.